So first of all, what is tax and why do we pay it? Tax is money we give to the government so they can run the country, like healthcare, education, roads, and much more. Now, the main questions are: who pays income tax in Canada? How is it calculated? When and how do we pay it? In short, residents of Canada pay tax on their worldwide income. Non-residents also pay tax if they work or do business in Canada, or if they sell certain properties here. The four-step tax calculation process, 1:30 to 3 o'clock. Now let's talk about how your tax is calculated in 4 simple steps. Net income. Add all the income you earned and subtract your deductions, like RRSPs or childcare. Taxable income. This is the income on which tax will actually be charged. Gross tax. Apply the tax rates to your taxable income. These rates are progressive, meaning the more you earn, the higher the tax rate. Personal tax credits. You subtract your credits, like basic personal amount, from your gross tax. The result is your final tax payable or refund. Who pays income tax in Canada? 3 o'clock to 4 o'clock. There are 3 main types of taxpayers in Canada. Individuals, like you and me. Corporations, like businesses. Trusts, which manage property or money for others. One important thing, partnerships are not taxed directly. Instead, the partners report their own share of income. Forms of business versus tax entities, 4 o'clock to 5 o'clock. There are 3 main forms of business. Sole proprietorship, one person runs the business. Reports income on a T1 return. Partnership, 2 or more people run the business. Each partner reports their own share. Corporation, a separate legal entity, files its own T2 return. Also, some entities are tax exempt, like registered charities, municipal governments, and RRSPs. Tax planning basics, 5 o'clock to 6 o'clock. Let's talk about how people legally reduce their taxes, called tax planning. Tax avoidance, for example, using RRSPs or claiming eligible credits. Tax deferral, delaying income to the next year or claiming CCA faster. Income splitting, distributing income among family members to pay less tax overall. Quick summary, 6 o'clock to 6:30. So to summarize this chapter, Canada uses a progressive tax system. Residents are taxed on worldwide income. Non-residents are taxed only on Canadian income. We calculate tax in 4 steps: net income, taxable income, gross tax, personal credits. Different types of people and businesses have different tax rules. Tax planning helps you save money, legally. Outrow, 6:30 to 7 o'clock. If you found this helpful, please give it a thumbs up, and don't forget to subscribe for more simple accounting and tax breakdowns. If you have any questions about this chapter or any part of tax in Canada, just drop a comment below. I always reply. Thanks for watching, and I'll see you in the next one. Bye.